Student loans are one option available to you for funding your education. While there has been some discussion on student loan forgiveness as of late, nothing is concrete yet. So I've decided to put together a presentation on things you should know about borrowing money to fund your education. For example, even if any amount of forgiveness is put into place, the likelihood that it would cover anything but government loans is extremely low. So what are student loans? A student loan is money sourced for your education and the costs associated with obtaining that education. Unlike grants and scholarships, student loans must be paid back. Before we get into the funding sources and the types of loans available, let's go over their pros and cons. Once you weigh the positives and negatives of student loans, you may decide you don't even want to go down that road. But before you make any final decisions with anything, do your research. Because every person's situation is unique, and something that could be considered a con for one can be considered a pro for another. Let's start with the positives of student loans. First, they may allow you to have money to attend school that you may not have otherwise. Federal loans typically don't require a credit check. You don't have to make payments while actively attending school. They can be used for housing, tuition, books, supplies, or other things you need to get your education. And finally, interest is tax deductible. Now let's go over the cons. Unlike grants and scholarships, the money must be paid back even if you don't graduate. If you can't make your loan payments, it will impact your credit score, which also may impact getting a home or car loan. You still get charged interest even though no payments are due. The more you borrow, the higher the balance. The higher the balance you have, the more interest you're going to have to pay. It can take years to repay your student loans. And finally, you still must make payments after you've been out of school for 6 months, even if you don't have a job that will financially allow you to do so. Now that we've talked about the pros and cons that can be linked to student loans, let's jump into some information associated with student loans. As you can see by the facts surrounding each type of loan, a person is better off trying to get any grants or work study money first. Then, if you decide you want to go the loan route, opt for federal loans before private loans. The great thing about the federal loan program is that you can use the same application for federal student loans as you use for grants and work study. So it's going to be a one-stop shop and you don't have to fill out multiple applications. All right, let's move on to the two different types of loan providers. There's federal loans and private loans. When it comes to federal loans, they're backed by the government. As I stated earlier, the application is attached to the same FAFSA form you fill out for federal financial aid program. The interest rates are typically lower than private loans and they're going to be fixed. You must be enrolled at least part-time, which is 6 credits per semester, to be able to qualify for a federal student loan. Once you start getting charged interest, the interest is going to be tax deductible. The possibility of forbearance or deferments may exist under certain circumstances when it comes to federal student loans. Now let's move on to private loans. They are going to be backed by banks, credit unions, and other private lenders. They typically have much higher interest rates than federal loans, and the interest rates can be variable, meaning that they may increase or decrease at any time. Private loans may come with fees attached, and they may require an established credit history. Interest may not be tax deductible, and typically they don't provide any kind of forbearance or deferments, no matter what your situation is. Now that we've talked about some of the pros and cons of student loans, let's get into a little bit more detail of how student loans work. There are typically 4 types of student loans, which we'll get into a little bit more on the next slides. The 4 kinds are direct subsidized loans, direct unsubsidized loans, direct plus loans, and direct consolidation loans. First, we're going to go over direct subsidized loans. Direct subsidized loans are available to eligible undergraduate students who have demonstrated financial need. The federal government pays the interest for direct subsidized loans while you're in school at least half time. They also pay the interest for the first 6 months after you leave school and during deferment periods when you postpone loan payments. Now, I've talked a little bit about credit and interest in some of my other presentations. You may remember that interest can end up costing you a lot of money in the long run. So the fact that the subsidized loans cover that interest for you for a time period can be huge and be a huge cost savings. Direct unsubsidized loans are available to eligible undergraduate, graduate, and professional students regardless of financial need. With unsubsidized loans, you're responsible for paying all the interest, even as it accumulates while you're in school or during grace or deferment periods. Unsubsidized loans are a little bit less desirable than subsidized loans, but if you don't meet income qualifications or are not an undergraduate student, they are your best option if you have to take out a loan. Direct plus loans. Eligible graduate or professional students or eligible parents of dependent undergraduates can take out a plus loan. The maximum amount you're approved for depends on the cost of attendance minus other financial aid you've received. Lastly, direct consolidation loans. This type of loan allows you to combine all of your eligible federal student loans into a single loan with a single loan servicer. There is one more option available to you that is not included in the previous list. While the Perkins loan is still need-based, the funds are provided by the school itself. It can be available to both graduate and undergraduate students with an attached interest rate of 5%. The downside is that you need to meet income guidelines to qualify, and not every school offers the Perkins loan. If you'd like to look into the Perkins loan and see if you meet the guidelines, you can find out more information at studentaid.gov. Taking out a student loan is a big decision and it requires a lot of responsibility. While you may not have to worry about the loan or payments while you're in school, once you hit the end of that grace period, you will be responsible for making the payments for the life of the loan, and in some cases, the life of the loan can be decades. So I want to go over some things you seriously need to consider before making the jump. First, do your research. Not every field of study is going to have salary expectations that will allow you to easily pay back student loans, and not every field has a good rate of placement. Your school can help you with this information, or you can take a look at the U.S. Bureau of Labor Statistics by visiting https://www.bls.gov/OOH/ as well. In addition, it's good to remember that just because a field tends to pay more doesn't mean that you'll be able to find a job making that amount right after graduation. A lot of companies tend to want experience tacked along with your education in order to pay a salary at the higher end of the spectrum. So what's involved in getting a federal student loan? Well, first, you fill out the free application for federal student aid form. FYI, you will never need to pay to complete the FAFSA form. So if somebody tries to get you to pay, walk away. Next, see what you qualify for in grants and work study, and then decide if you want to move forward with any loans to cover the excess. Third, If you decide to accept loan offerings, complete entrance counseling, which will thoroughly explain your obligation to repay any loans. And finally, sign a master promissory note. This will bind you to the terms of the loan. If you decide to take out student loans, all you need to do is start the guided process. The studentaid.gov website has a ton of very useful information, but if it doesn't answer all of your questions, the financial aid office at your school of attendance can be very helpful as well. As I stated in the last slide, filling out the FAFSA will always be free. The reason I brought that up is because there will always be scammers out there trying to take advantage of someone in need with promises of free money. Because of this, I want you to be extremely careful and always use government or school resources when available. Let's go over a few facts that will help you avoid being scammed. You will never have to pay to get help finding money for school from federal programs. While there are some services available that are not associated with the government provided help is free. No one can 100% guarantee you that they can get you money for school from the government, whether you pay them or not. And they're more than likely only going to be able to provide you with the same information you can get everywhere else for free. You don't have to pay to get help filling out your FAFSA. That's what the financial aid office is there for. You also don't have to pay to get help repaying your loans. That is what your loan servicer is there for. With the onset of the pandemic, scammers are taking advantage of people in dire situations, offering pandemic grants and Biden forgiveness loans. These are a scam. If you see one, report it. Read more ways how to avoid scams at studentaid.gov/resources/scams. Seriously, studentaid.gov is pretty much a one-stop shop. As I said before, defaulting on student loans can give your credit rating a hard hit, so make sure to be responsible when taking loans out to pay for school. Don't borrow more than you need. Keep track of what you're borrowing so you can prepare to repay it once your loan payments start. Make sure you understand what you're signing and don't be afraid to reach out to the financial aid department if you have any questions. Once you sign a contract, you're bound to the terms of that contract. Make all your payments on time. Make sure to contact your loan servicer if there are any major changes like a name change, address change, or social security number change. If you find yourself having trouble making your payments, reach out to your loan servicer. Oftentimes, they can help you figure something out. Thank you for taking time to listen to my presentation. If you have any questions about information I may not have covered, feel free to reach out to me on Facebook group. If I don't have the answer, I can point you in the right direction to find it. In addition, all of those links I provided to you during the presentation will be available in the comments section.